Stocks may be having a banner year, but the U.S. dollar, interesting here, hovering near an 8-month low against a basket of currencies. You've got the Fed, you've got the budget battles all weighing on the greenback. So is it time to close the books on your U.S. investments and look elsewhere? Paul Dietrich is the CEO of Fairfax Global Markets. Hi, Paul. Great to see you. What do you think? Where are the best opportunities these days?
Well, you know, with the Dow and the S&P 500 reaching record highs, people are asking me, where are the undervalued plays in this stock market? And I think the answer is emerging markets, and especially China. Emerging markets have been coming up since June. China's, if you look at the China Spider ETF, is up, about 20-some-odd% since June. And about every 10 years, we see China dip when they have a management change in their government. And right now, they're implementing their new 5- and 10-year plans, which they take very seriously. Part of that plan is to move 250 million people from rural areas into newly built cities that are going to be built over the next 12 years. That's like moving the entire urban population of the United States and rebuilding all the cities here in the United States.
Yeah, that's a tremendous economy. My goodness. Want to drill down on the emerging markets, because I think this is an interesting story, because emerging market profitability is so based on U.S. monetary policy. And way back in the summer, when we were expecting the taper to commence, everyone was pulling money out of emerging markets, right? Because of the liquidity evaporation there, right? So now you're more bullish on emerging markets because it looks like the Federal Reserve is going to stay the course, correct?
That's exactly right. That's not only going to help the stock market, but you're also seeing fundamental changes. I mean, places like Mexico are growing about 4 or 5% a year. China just hit 7.8% GDP for the last quarter. That was above expectations. And their exports are up, their productivity is up, manufacturing is up, and consumer spending is up. And as they're moving to a more consumer spending society, as opposed to just an export manufacturing society, we're seeing China going up, and also they're spending more because of these new economic plans on commodities. And that's going to drive commodity-rich Latin American countries like Brazil and Peru, things like that.
Meanwhile, speaking of commodities, we're seeing the oil barrel come back below $100 today. Gas prices are a little cheaper. Economists are feeling a little more comfortable. Obviously, we have the jobs report coming out tomorrow. The Federal Reserve likely to stay on hold here longer than anticipated even a couple of months ago. So what is your expectation for the U.S.? Most people are very bullish, regardless of even the situation, the chaos in Washington.
Yeah, I think one of the good things, if you look at North America as a total economic zone between Canada, Mexico, and the United States, we're all going to be huge oil producers and oil exporters. And I believe the long-term prices on oil are going to come down, because we're going to be kind of the Saudi Arabia for this decade, or for the next couple of decades, in terms of oil and gas exports. And that's bringing manufacturing back to the United States. Low-end manufacturing is coming back from China into Mexico. And that, plus the growth in agricultural exports because of the middle-class boom in China and in all throughout Asia, the long-term trends look really good here in the United States.
Always appreciate optimism. Paul Dietrich, thanks so much. We'll check in with you soon.